Good afternoon, all. This is Fari Hemzi with Hemzi Analytics. It's 4:32 p.m. on Wednesday, 5th of April. We're broadcasting to you from lovely downtown Cape Naples. Now, don't try to Google it. You can't find it. But we call it Cape Naples. Anyhow, a couple of real quick housekeeping updates. 4.9 is doing really, really good. As expected, even this tumultuous market had a pretty good month. We do post our trades, but not my trades, okay? Trades of the clients. Off the machine automatically in Chicago to buy two system houses. Why do we do that? Because we want a third party involvement. We don't want to make a claim. We want to come up from the statements of the people who trade the software by a third party IB, introducing broker, and executed by third party FCM. And there are many of them because we trade across TradeStation, StoneX, Iron Beam, there are a couple other ones that RJ O'Brien, Interactive, you name it, it goes through that. Our code is written in TradeStation, but they have a translation tables that executes the trades. And so we've also posted the gentleman who did that for us. That's his account, his money. Was the first guy who did it for us starting 5th of May last year. He decided to take a break and not from trading, but he went to, he's well off. He's done good. He's Marshall free. He went to a trip to Antarctica. I understand he just got back. And as of this morning, he was telling me that by tomorrow night, he should be caught up. I have to review it and then make sure that we push up the analytics to it to compute all the data there. So you get a very kind of formatted the results, and you have access to go see not trade by trade, by day. If you trade a system yourself, you got to match it. Yeah, it's the same code. So that should go out over the weekend, and we're gonna give our last push for people who want to get into 491. Why? Because 5.0 is coming. I just hanged up with my other programmer who does the 5.0 and is again a veteran of TradeStation, 15 years or so, and he's actually doing a pretty interesting work on an offshoot of TradeStation for a big client in the Middle East. And so you're taking a little bit of time off. He says, "Fari, I just need to finish it." I said, "Go." I don't need you between two programs. That's the worst thing you can do. I've managed a lot of programmers over the years, and when you put a gun to their head or give them a tight deadline or push them, you're gonna get garbage. And this is not something you want to deal with garbage, because this is dealing with people's money. So we'll take a little bit longer. And before he went to that, I knew that was coming. I'd make sure 491 met our requirements. 4.9 was an offshoot of the last version is posted here is a 490. Yeah, we had a 491 offshoot of that. As you know, we had some issues in 4.85. We actually abandoned it. Went to 487 to put these what's called a inner bar order generation off and add log files, because frankly, I'll say to TradeStation faces, they know where I'm coming from. They know all of us. We've been with them 30 years. I said, listen, we can't figure out what you guys reporting on. It was called Trade Manager. We need a lot more detail, like kind of more tracing of internal values, as often as every few lines, so we know exactly what the code executed, what the trades were, and then that very match with actuals. So log files are large, and we if there's a problem, don't send me your chart. You gotta send me log file too. Yeah. So and then we'll go and figure out all these values, but log chart big help to us. So that's where 491 is. 4.50 is a takeoff on 4.91. It is the code will remain the same. The algorithm code, the logic will remain the same. We're not changing anything there. It's very robust. It's been trading since I think October, or maybe September actually. That was a problem. Yeah, from October 6th of 2021. Okay, so it's very, very robust. That's not changing. What is changing is that not using TradeStation API, not executing via TradeStation, only using TradeStation as accounting. That means they keep the money, they trade it there, and it tells them what to do. But what the balances are, so on and so forth. If they're doing a gang trade, it would be equal weighted for the fills and all that. But mainly, we're purely using a TradeStation as a accountants. That's all. Except that they have their FCM. They're executing future orders. Okay? So that should be out. Now I'm going to be out of town on the weekend of 14. I'm going to San Francisco for a quick in and out. But as a family get together, just 2 days. 2 days. I really don't have that much time. When I get back to the 17th, most likely, I'm told between 19 and 20 time between April 19 to April 20, that kind of middle of that week, I'm going to get a working model, an alpha copy. So start looking at it. The entries are done. Entries are fine, working fine right now. We just got to finish the exits. And then, and our biggest push right now here is what happened here. You got to realize. Let me go back there again one more time. I don't get a chance much to explain, but let me use this time. What happened here was our partially our own fault. Right here, we became victim of our own success. October was a huge month for us. It's this high efficiency version was released. Yeah, October we killed it, absolutely killed it. I have a fellow who bought a Rolls Royce out of the trades of October. Yeah, client in West Coast. Yeah. Now he's got good money. Don't get me wrong, but he did that. But that's how it was. Well, what happens in November? Remember, some of these system houses, they rank you. They just like Time Digest. They show your ranking is. Guess what happened if you're number one in 5 months of tracking data on a yearly performance? Okay, we were ranked number one within 5 months for a look back of 12 months. They got inundated. They got killed. I mean, there was so much business coming in. Well, the code wasn't ready. The 4.9 or 4.78, whatever, could not handle that big. We became victim of our own success. So we had to huddle back, start looking at what the issues are, get 4.8 going there to address that. Of course, then December was a lousy month. That combo said to us, "Hey, lousy month from the markets." Now, remember, we cannot project market texture. That's something different. Like we had July. July last year was not good either. But anyhow, it comes back. It comes back. You look at the chart, you'll see it. This is a chart. You could see. It does this. There's no straight line. Why? Nobody knows what kind of day you have tomorrow. And we trade 4 days a week. We do not trade on Wednesdays. So, but that's what we got. So long and short of it is, we went to huddle, and my program and I decided we have to bring another fellow to join us. His specialty is called order tickets, which manages replaces the API. The API is what executes the order after the trade comes out of your machine and tries to go to Chicago via TradeStation, gets through CME, Globex, matching engine, and gets a fill. We're replacing all of that. It's not easy. But when you're trading size, you got to manage it yourself. And this is not a secret. TradeStation has stated in no uncertain terms, as lawyers like to call it, that they do have issues with API. Yeah. So I can't go there and force them to change, and I don't know when they're going to change. And you know me, I don't beg, I don't ask. Where I come from, we just issue orders. So I said, you know what? We're going to take control of this. We got to do it ourselves, so we don't have to worry about their timeline, their schedule. Listen, I gave like a 9-item wish list to TradeStation in exchange for what I did with the improving their option station. So we bought it, if you will. It took them 2 years to program it. I don't have 2 years. I don't think you do either. So this way we started. And so first goal we had was make sure we have a good band-aid. Very good band-aid to hold us up until we get there. And that was the month of December and part of January. If you go back again to our timeline here, you'll see that it was a lot of regrouping there. January we got out. We had 1 or 2 updates, minor. There were some code issues we found as we were starting at 5.0, so we had to go to 4.91. Okay, 4.9 and 9.1 are highly correlated. A couple of small certain logic for large size trades, which we have, I believe, one person was using that. And I told him, throttle back. Don't go about this because we're trying to fix it, but we know there's an issue there. We've solved it. And now we've had a pretty good March. I think the last piece of the puzzle went in like by Valentine's Day in mid-February, which is 4.91. So we're good here. I will update this. I will put 4.91 up there. This is showing 5.90, but that's where we are. 5.0 is next. 5.0 should be here, I'd say, by late April as an alpha test. We will be, most likely we'll be able to get into beta. Beta takes a little bit longer because you have to train actual users. Some of the users select ones that was because they were good with TrainStation. I really don't want to put a novice into beta testing. It's just too dangerous. And then that's after I know what I'm doing. And then our goal is to fight. That's in May. By June 1st, we'll have it released. Okay. Prices are not going to change. Nothing is going to change. It's going to be basically internal. It's a back end. It's about 4,000 lines right now. Remember, we started this around 300-400 last October when we started. Not last October before. Yeah, back here, September, October 21, we're about 400 lines, 450 tops, about 4,000. So here we are. I never did anything simple. I never did anything small. Not my psyche. So my dad was a fighter pilot, and you aim high, and sky's the limit. You just go. So, all right. Tiger Shark is doing good. I have a 5:30 this afternoon for the last update I'm going to do to Tiger Shark. It's doing really, really well. And I'm probably going to exclusively trade that because of its span, So now I'll watch Orb. I'm involved with the folks who are doing Orb. Tico may trade Orb, but I'm going to do Tiger Shark, especially this new release, which I'm keeping it by hand. I'm just going to have a coder set up some annotation software there to make it a little bit easier. Okay. With that said, I talked about my schedule on the 14th. Let's go to the calendar. I want to talk about non-farm. I want you to be aware, please, that we finally realized that this was not an error. Most places are showing it as this Friday, but market is closed. It's a Good Friday. Globex will be open, so you can trade the ES and NQ. So is MES and MNQ. It's a partial day, and actually we need to go and double check that at CME. I won't do it here, but we'll do that before we get there. But at 8:30, I'll be here before 8:30, obviously, an hour earlier than normal. We're gonna trade it, and then that's it. It's gonna be a short day, maybe 10:30 or something Eastern. It'll stop. I have no idea. Maybe noon, or maybe 1 o'clock. It'll stop. I know it's not a full day. And I know the bonds are not open. I know the stocks will not be open. So most likely, it's going to be a big whoosh and then quiet. So be careful of that. But that's the non-farm this week. Big number this week. Obviously, from what happened in the last. Remember, all this upheaval started on the 9th of March, the recent one. So we're in a different place right now. 240 is a consensus. Remember, I did say one thing day one. Remember, I said what the Federal Reserve and Treasury is doing is anti-inflationary. You could see things are pulling back, and the economic data today was a little bit soft. on services side, and basically their engineering is slowed down in the services, in the employment area, and that's all good. That's all good to get to kick in the to kick the inflation one more big punch and start to really bring it lower. I still want to see a positive real rates. That is, let's go back here quickly for a second. I want our rates to be above inflation rate or not. They're below it. So these are still free money. That's no good. I want to get to a point where we are slightly positive over inflation rates. And if you want to look at front end, you want to look at 2 year, whatever you want to look at, we're not above, the rates are not above inflation. So that's a problem. Once we get at or below, then I think you got a normal economy. The covenant with the net savers comes back in. People can save because right now they're pushed into, this last few months are different to the 5% market. But prior to that, they were in crazy stuff like crypto and, trading NASDAQs and all that. And this is not for the retirees. They should be more in bonds and a little bit safe stocks to be dividends and all that. So all of that was broken post the 9/11. So we've had a very, very tough time. Of course, some who bought bonds recently, they got their ass handed to them, or their head handed to them, whatever you want to call it. Pardon my French, but this is exactly what happened with SVB. You're buying coupons at 3%, 4%, and then these things, or 2%, and then the current rates pop. The face value is going to take a haircut. So the face value drop. Now, if you're holding to maturity, nothing happens. You're fine. Nobody does. When emergency comes up, you have to sell it. And that's what happened with SVB, and it's really got difficult. Now, problem with SVB is different. I think regulation is the issue. They need to mark these to market. I mean, I can see even the geniuses who were involved with the long-term capital back in 98. I don't know if you guys remember that or not. August of 98 into October, there was a 60 days of turmoil in the market. They couldn't market to the market because there was no last trade. So the geniuses of Martin Schulz and John Mayweather, I forget the kid from MIT who made $22 million that year. His models worked so well. He was paid. I think John Mayweather was paid $5 million. Martin Schulz was paid something around $5 million. This kid paid $22 million. It come from MIT, from their financial engineering program. But then they started theoretically measure mark to market. Why? Because there's not trading. We don't have a problem here. All these positions were trading. The management failed to market to the market because they want to hide it under the carpet. And also there was no needs regulation-wise because they said, we're going to hold it to maturity. That's a bunch of BS. How come none of us can hold things until maturity? We get mark to market instantly. So if you're taking options or futures, you mark to market instantly. So that we're going to see. That thing I want to watch for this coming earnings season. Let's see how the banks look. That's crucial. If we have more skeletons out there in the upcoming earnings season, I think you're going to see how people with all the banks again. So be careful. Now, market timing, we're flat. I'm going to get into that in a bit. You saw my email going. I actually said early last Friday, by the end of the day, I'm going to be out. We were there 3 weeks, and we took 249 handles out. Only in America. Right, right, Dennis? I'm saying 10. 25. I see. I'm saying, what is it in Q? Looks like, Dennis, what is it? Like 8:15 close, Chicago time. Really? On Friday? I'm saying, okay, I cannot post that, because that link is not linkable. That here is asking, is it for me or Fari is breaking up now and then? Anybody is having audio video issue? I'll do a quick speed test here. I don't think it's us, but you know what? Let's not guess. Let's just do a quick test here. It's probably the best test I like. It's a speed test that is in the Microsoft what do you call it? Whatever this is. This Microsoft Store. You download from Microsoft Store. So it's built in for the 11 and 12. As you can see, what our numbers are. Nancy's not having any audio. Oh, yes, I'll get to that. Hold on. You see, there's our speed test. You guys see it? Oh, sorry. Oh, hold on. What did I do that for? Oh, there we go. You could see 939, about a gig down and 200 up. So, and Nancy says she's not having any problem. So, around here, you may be the only one. Here's my suggestion: go in and out, recycle. Dennis says audio is good. Yeah, recycle. Okay. Dennis, I'm trying to still figure out what you're saying on the. Looks like 8:15 close Chicago now. What? 8:15 in the morning? Can't be. Hold on. Let's just go there quickly, guys. That's a good point. CME, Good Friday. Look, hours. There we go. Let's see what we got. Holiday calendar. There we go. Okay. And Good Friday. Here's the. Oh, okay. Okay. There we go. Futures. No. That's a 10-year. No, I don't want that. I want the indices. EFX. No. Where the hell is why is it giving me this crap? Huh? I want the equities. Where are the equities? Let's see. Oh, there we go. Okay. Friday. Thursday 6, right? Oh. So they're not going to trade? Actually, so I guess you're going to get a non-farm no trade. Interesting. Okay. Interesting. So you're going to get it close. Okay, thank you for bringing that to my attention, sir. I appreciate it. So we can't trade it. But the number was going to come out. So they're not delaying it. I don't know why. All right. I'll call CME tomorrow. Still have a few friends there. I'll figure it out. Okay. Anyhow, so back to the calendar. Now, what did ADP report today? I completely missed that one. Hold on. 261 versus 242 upgraded. 200 consensus. Yeah, yes, it's coming down soft. Yeah. This is shape of things to come. They engineered this. They're going to get it. I know IMS services was a problem because there was a pretty good move at that time in the market, if I recall. There we go. 50 is the issue. We get very close. So 1251. Yeah. Yeah. This I remember. Now let me look at this one. I missed looking at it. Hold on. Trader services. Somebody's texting me. Let me see what this is. Oh. What? I understand. Okay. What? Okay, hold on. No, somebody's texting me. I can't respond to that. Texts are too long. 68 was a negative for import export. 67, 68 came revised down a tiny bit, 400 mil. Consensus about that, we came in lower. Okay. So we have a deficit of 70 billion. Okay. Wow. Okay. Okay. And then again, I'm not an economist. I'm just looking at expected value for the final list. I don't look at EIA. I don't trade oil. Tomorrow we have jobless claims. Ebola is speaking. Oh, good. At 10. Okay. Fireworks at 10. And then that's it. And consumer credit. That's fine. That's it. You see, there's a black report, not important. All right. The following week is PPI, CPI. The following after that is option week, third week. Okay. All right, let's go through the charts again. Let's talk about what we did in the market. Okay. Again, this is SVB going down, March 9th. I went long right there. Okay. At the close of Friday, I went long. Send you our emails. Said it that day also that I'm going to be. I'm sorry. I said it noon of Sunday that this is what we'll be doing. Remember, Time Digest gives us the last known close of SPX. Always. And if you cross a timeline of midnight, then you don't get a fill. You get a fill the next business day, next known SPX. It's not. You're not trading money. You're trading. It's a contest. It's among 120, 130 people, and over a long period of time. You're not day trading. These are swing trades. My average trades are about 12.5%. I'm sorry, 12.5 days, calendar days. So a little bit over 2 weeks on my average. The number of trades is. I'll show it to you actually. Here you go. This is the recap. Hold on. Come on. 1 second. Okay, this is the recap of what we have done. So if you go back, you'll see we have there's 171 trades in there over 2,100 days. On the average is 12. We have a max number of gains and losses, the standard deviations, and for S&P and our spread. Spread is how far we are. When you can see what we have done. You see that? So since February of last year, there we go. From February of last year, we've killed it. We lost $16. That's about what is it? D27 to 23. That should be 235. Hold on. Let me put 235 in there. Yeah. This is our last time. Okay. Nah, this is from last year. We have taken 1,500 handles out of S&P. God bless America. That's 15,000 points on the Dow. Our loss was $16. 16 handles. Okay. Now that creates this. Now we're flat now. That creates this chart that may be familiar with you. Let me post this up. Okay. Yeah. If you call the Time Digest, they'll give you these trades every day. You'll see what we did: long, short, flat, whatever. Now, this goes back to when we changed our indicators back in November of 14. And let me move this over a little bit. There we go. You can see all-time high right now. And this spread, this differential is 115. Now, one caveat. When we're not in the market, when we're flat, there's no change on SPX because that's anchored. Did I go long or short? What was SPX? And then how long I kept it, what happened. So if it goes up and I went up, then I get positive yield. If it goes up and I was short, I get negative yield. It takes away from my score. And vice versa. What if I went long and the market dropped? So when we were flat, there's no change in the value of a SPX. Then we normalize it as of that 0 point. You could see this is the time I had that accident, really bad accident, which I was under heavy medication here in Florida. But you could see what we have done, and we immediately came back. By the time we got to March, I came back, and actually this was like 1 or 2 trades, and then once we got the separation, it went. This was COVID, and this is last year. So, okay. Now, yes, we have done better when the market goes down. Why? This is buy and hope. We said it's a play on buy and hold. Buy and hope, because basically the country is bullish. The country is going to hold the shares. So they don't know what to do on the downside. Why? 401k, everything else. They can't go short. So they're holding it. And so it's buy and hold, we call it buy and hope. But we're not. We're flexible. We go long and short. By the way, this is cash on cash return. This is cash on cash return. It has nothing to do with options. Okay? Once you add the options to it, it's a killer. But this is what we have done over this period. So it's about 18, 19% a year compounded. I suggest you go to Morningstar, see if somebody else has done what we have done. When you find that portfolio manager who's done that, let me know. Okay. So that's what we do. This is the last post. Oh, I'm sorry. This has to be changed. Hold on. Oops, I gotta go here and say, hold on. Flat SPX. Hold on. As sorry guys. Yeah, flat SPX as of Friday, March 31st. And we hit 4,100. I forget what the close was, but I recorded it. So I have to post that anyway. So the spread is right, the amount of it. 4,109. So 4,109. Remember, our goal was 4,100. It's in the webinars. We said that 4,100. We want to get out. It went a little bit above that on 4,109. So went above that on Monday, and you saw what happened on Tuesday. They killed it, and of course today. So that's where we are. So mission accomplished. I think we were a little bit lucky. That's why I like to look at it. But indicators work when they're supposed to. They get a pretty good signal on McClellan oscillator, on SP2, on Momo, on VIX spread. They all confirm that we've gone too far. We should pull back. Now, it doesn't mean that we should short. What it means is the odds are way against us. We have maybe 3 or 4% to go up, and then maybe 5% to go up, but 60% to drop. And we did. Why? The same rules I talk all the time. Sigma levels, McClellan oscillators. You know, you could see these levels. These are not my numbers. They're proven, tested, empirical observations over 5, 10, 15 years. So as they occur, you got to take notice of it. So anyhow, I think we'll have a little pause. I don't think earnings is going to be as good as we think. Are we looking at a kind of a flying off the cliff? No, I don't think so. No. I think I was surprised that Fed did a quarter point. My suggestion was to take a pause. Obviously, Chairman Powell is a lot smarter than I am, and so he did what he had to do. But I don't think you're going to see much from them at this point. Yeah, they're going to be a little bit light here. They're also going to see this was a rally, just a relief rally. You know, we did not go to any great highs. It just basically came out of this hole we were in. Data, there's a lot of more data they need. And the biggest thing they're going to watch is look at employment inflation. If that goes away, I think you're going to see him. He's up on the rates. I think next meeting is in May, isn't it? I forgot. Nancy would know. Federal Reserve. Where is this? Murray, where's Federal Reserve? What's up here? FRB. Where's FRB? I used to have it here. Murray, you're killing me. Oh, there we go. Federal Reserve Banks. There we go. So, monetary policy, meeting calendar is May. Yeah, March we've done. Next is May. Beginning of May. So, I just think by then we have all of the earnings in. Most likely you're going to see them a quarter or a pause. I hope they go to a pause. And if the market senses that possibly this is the case, and of course language is important as always in the communique, but you're going to see what the market does the best, which is discounting the future, and you're going to see a very strong rally. That's what you're going to see. The biggest problem we have really is multiples. That's another discussion. That's quantitative work. But you know we've had pretty decent collapse of multiples, and we're not going to go to anything huge upside until the P's start moving, and I don't think we're there yet. Obviously, there's a lot of issues with text. You can see what happened today. You saw what they did on some of the names. We run a program that does a block trades of the by names in real time, and most of the day we're getting FANG and NVIDIA and Qualcomm and all these just selling with vengeance. So that all should lighten up. At one point, we'll go back. We do need we do need tech. We can't go without tech. So a couple of questions here, Scott. Thank you. I'm sorry. Sorry, what is this? Okay. Peter commented that futures will be trading about 45 minutes after non-farm. On Friday. Okay. From where? CME doesn't say that, Nancy. We have to call in the morning. Okay. Okay. Thanks, Anita. Thanks for the lack of the little Mac. Okay. I think so. Month one CPI mid-month. Yeah. Yeah. FOMC May 2nd and 3rd. Right. So, it's a little bit different this time. But at the end of the day, it goes back to order flow. Supply and demand, and I'm not talking about stocks itself. I'm not talking about the economy. I'm not talking about supply management and all that, or supply chain. I'm talking about the actual order flow every day, nuts and bolts of it. Yeah, some of you guys are that type, tape readers or electronic tape readers. I think I try to be one, but I use tools and I keep watching, and so far, I think one of the best things we had was yesterday. It was very different. So I pushed it back down strong. So, all right. But Indicator said they were coming. We wrote it out. We sent it to you. As a matter of fact, on Friday, midday, I said, by close of today, I'll be out. And of course, we did. And by close, we did reach 41. And I forgot what the high was on the cash. This is Friday. 41.10. That's it. 41.11 almost. Yeah. We went slightly higher. I think we hit 15 on, or 127. Okay, on cash on Monday, and then you saw how I gave it all back in today. So let it rest, let it pull back. We're still in slightly overbought area, so it'll normalize. I just don't know when. I don't try to tell when. I try to look at order flow. Yeah. I'm very empirical. Okay, in terms of, I want to look at empirical observations rather than making a guess. Listen, the quant guys, you see what happened to them in 2008? Yeah. So it doesn't work. You're good up to so much, so far forward, So, all right, transportation did not have a good day. Yesterday was one of his worst days in a while, as you can tell. Going back to maybe SVB day, right? This is SVB. So we're below 50, above 200, testing 200. Russell is a different problem. This year, let's see, this is a beginning of the year about here. So we had a start rally into Feb, but since February 2nd, they've sold it. It's been in the toilet. And obviously it wasn't a great area either, but it was testing a 200 day. It got over it and then lost it. And now it's trying to regain 200 days. So I would watch this area of the curve, around 1820 area, 1825 area of the curve on Russell. Why? Where Russell goes, Nasdaq is going to go. Right now, the small caps are not favored. Of course, SVB didn't help. Okay, D-trenders. This is scoring setup. So 1, 2, 3. That's neutral. 4, 5. Okay, so you got 5, 2, 3 of 8. Still mixed. Nasdaq is doing a little bit better, but it's not going to go anywhere like this. You just can't. This is different geometry, if you will. So we shall see. Yeah, no big signal here, but no great. Nothing negative, nothing positive here. Just it's unknown. Okay, SB1 Momo. SB1 went up to almost 2.5 sigma on that Friday. We went to, this is something we talk about sometimes when I get a chance during the day. We hit 12, 20% above the overbought area. Of course, that had to be sold. That had to be sold. That was that Friday, and that's what you see. Now you have 4. 0 is neutral, so we're halfway between 10 and 4. We're here near 1 sigma as of now. Let me refresh this just for the heck of it. Yeah, we're right. Okay. And you know what? This too. Let me see this one. Oh, wait a second. I did do this. Yeah, we're good. No, we're good. Sorry. Yeah, I got ready for you guys. So, okay, let's go to VIX and VXN. What have we talked about here? We said we're going to sell down after we go to this pattern. And we were hitting 4 sigmas. But this is the 4 sigma, the dash line. This is a positive 4 sigma. VIX is a negative asset. So it relates to reversal in the S&Ps. Okay. And this is the CI. Right now it's heading south. So vols are getting sucked out. We can go back to some option trade. When it's up here, it's too dangerous. What you got to make on the X minus S, you're going to give it back in MIV. Why? You want to make the market makers a little bit more richer? I mean, like Susquehanna, Citadel, Timber Hill. These guys are fairly rich. These are, these guys have $1 billion, $2 billion, $3 billion at a time at risk. So don't help them, help yourself. So SQ is at 0 sig. Okay, and it hasn't done anything. It's 120, 140. Let's see. Yeah, but 139, 140 is the halfway from the observed point of view of the data, from all-time low 110, all-time high 170. So I'm sorry, am I doing this right? 110, no, not so. Yes, 140. Yeah, 140. Okay, so we're about 125, 126. We're in second quartile here. No signal here. Nothing here of interest. The big boys, they have no protection here. So far, they have not engaged in anything big on the early part. Now, earlier in the month they did, and they gave it back. Earlier in the month they did, and they gave it back. We went to 2.5 sigma, almost 3, and the value was around 140. So that's and there's a table there you can take a look at on the white paper by Siebel. What was the value there? Value. It was no, that's a 0 sig. Want to know? Oh, 136.62. So we almost hit 140. I pulled back. There's no protection down. Nobody's buying any puts down here. There's no betting on a big drop here. Are they going to be wrong? Well, big boys have been wrong before. Who knows? But we don't have the strong signals we used to have. So. Again, empirical. Here's the interest rate structure. 91. Discount rate is a discount rate. These are yield to maturities. This is the YTM. Okay, yield to maturity. It's not the price of the bond that goes back and forth and then goes to 1,000 if you hold it through the duration. The problem with SVB was that two risks they have, which obviously shows they really did understood term structure of interest rates. They did understand the interest rate risk they had to hedge it. It was not an easy thing because the market going against you and you have a really negative slippage. But on top of that, the biggest problem they had was the duration risk, and that's what killed them. So, and then those sort of things you need to ride off slowly, to market, acknowledge it. These guys held on until the tsunami came, and then they wanted $1.8 billion, and when that hit the wires, everybody ran to and Peter Thiel ran for the hills, and you saw what we saw. Yeah, how do you evaporate a 200 and was it 40? Was it 210? I forget. $220 billion bank in a matter of 36 hours. So part of it is also electronics. Now you can move stuff. It's called what do you call it? I told my brother, part of it, I blame him. I said part of it is you because he's got the patent to VPN. That allowed people to move money. I don't know how you move billions with money with a phone app, but it's a transaction. So you can connect or you can do it from your desktop. You don't even have to go to the bank. That also needs VPN. Because of that, the money just moved out very, very instantaneously. Okay, spreads. Big spread. 3 months is negative 327. Again, just to be sure, we got to check always this because this constantly rolls. We're long April, which we're in now. It's not expired. It's actually got quite a bit to go to expiration. And then short July. So that's the correct one. We do see a temperature structure. You can see all the way to September what it looks like. And it's getting normal. You see the rates? 20, 21, 23, 24. This is normal VIX. So the fear is gone. Fear is gone. We should be heading up. We're not at the peak yet, but we're getting close. Okay? Where we were at the bottom was down here. Where this was, because this is the inverse. But gets near zero, we're at the bottom. I wrote a paper on this, posted on Cboe blog about how to use this. Now they're taking, there was the most clicked or read blog post by one person, not series of blogs, because there are folks who post every week, not those, but by one article only of this Cboe's blog. But they've done the blogs and they've moved them. I don't know where they are, but it used to be. As a matter of fact, that's where it was connected to. Hopefully, one day they bring it back. It was a white paper that they published for me, with some charts and logic. If you go to this one, you click here, it should go there. Let's see where it goes now. It's going to blank. See, there's no page now. Yeah. Yeah. I don't know what they've done, but anyway. Too busy with other stuff, I just it's not there. So used to go there, so oh well. But basically talks about how this operates, and you can set this up yourself. There's no magic. All I did here extra was that I modified our Sigma channel to take a spread and apply it on the spread. Why? Because you want to measure it against itself. That's the beauty of Sigma channels. Measures the oscillating assets against itself. So in a way, it's a rolling scale for you for decision making. It's like a matrix for your decision. Okay. All right. Stock RSI. We haven't made our rendezvous point. I think we're going to miss it. Okay. It's just the way the shape of these are. I think it's going to roll over. We're going to miss it, but we got very close. And we usually do. It could be roll down a little bit and then go up, and then we get our sell. We get really good sales. So that's still a possibility. Pull back, go back up. Maybe come back to 50 bar and then go back up, and then roll, and you want to short that, maybe. I'm done with this leg. This leg was very good. We took 245, 49 handles in S&P in 3 weeks. Yeah, Friday to Friday. Not easy to repeat that. So we're going to book it, and we wait for another time. We're not constantly trading. If you come into our PMT package and you're waiting for us to give you option trade, that's the wrong place. And also, when we were in these turmoils, we were not trading options either. There was a gentleman who was upset. Why you're not trading? I said, well, because we're event driven. There's no quota. If you're not happy here, then you shouldn't be here. He goes, yeah, can I be excused? I said, sure. Here's your money. It was first month he was there. I said, there you go. Not a problem. Not here to, make money and have a grieving client. Not into that. But you gotta realize we're event driven. There's a reason we've done. Our record is good. We just don't go out there keep shooting. We gotta get a setup. If we don't get a setup, we're not gonna do anything. And you don't know, and we don't know. But if the setup is good, then you're gonna see we go out there and kill it. Larry's. This is up and down. This favorites of Admiral Tico. He posts these charts. You should be following Tico. If you don't, then you're missing him. Again, here why he does it. There we go. This is your Admiral Tico there. He just posted the close. Oh, he's about to hit 1,500 people. Wow. Okay, here's the chart. Here's the reading. We do it a couple of times a day, one current, one final, when I'm not overwhelmed, because I got to help him to post it. Yeah. So that's the deal with that. And we weren't too bad. Look at it. We're not too bad. We're not. Russell is in trouble. Russell's no question. Russell is not done, mainly because from what I hear from my VC friends, all they're doing is come to Jesus meetings right now. So things are tough. Yeah. I mean, the money, I don't think money has been this scarce in a while for VC people. Even AI people, they're just not there money-wise. Yeah. So, yeah, the problem is that portfolio companies, not the big boys who've grown up and gone up. No, but portfolio companies that VCs have not cashed out yet, they're still on life support, and then you have a SVB event, and also you have very high interest rates for their setup. Remember, these guys doing 5-10 year plans. 5 years ago, nobody thought we're going to be here because of inflation. Interesting on the BPI, buying power index again from Larry's. We went to a short here today. We had just gone long on the mid cap. This is S&P. These are futures on live. It's running 24/7, 24/6. Short on Russell again. Excuse me. And remember, the long did not last. Boom, boom, killed. And but Nasdaq is still long. Okay. What else do I have here that of value to you guys? Oh, okay. Now let me show you this. I get work with on this with Peter Cook. This is this website called nations.com. They got a bunch of indices like TDEX, SDEX, and Volley, and I'm just learning. It's too early. And actually, this chart came from Cash. Has to do with a better way to look at vols, volatility, and better way to look at the skew. So hopefully, by the time I get back from California, I'll be ready for this to go over this with you guys. We always try to improve. We do not experiment. We do things based on recommendations that other people that I trust and I believe in. The same thing as SQ. I mean, I didn't get involved with this until I had a call from SIBO per referral of a head of Vol at Citadel. And so that was an interesting journey. You know. But we're always trying to improve it. There are some areas, if you go to nations.com, you'll see they have some good points of how they've structured these indices. Okay. Oh, come fly with me. Let's see. One last chart. Here we go. SPX, dollar sign, 200, dollar sign SPX Alpha 200R. Let's go to 5-year here quickly. Guys, it's almost getting 5:30. I gotta get ready for that conference call with programmers. Okay, you could see now we edged up. We're at 57. Nice run up since last Wednesday we talked. Obviously, a pullback recent. If I go back to what point, like a 0 in, you could see a little bit better right here. Yeah, we pulled back last couple of days. This is today, correct? We closed 40.90. That's correct. Always double check. But I think we did the right thing. I think we pulled out the right time. I have no regrets on what happened on Monday. Yeah. I want the positive slippage. Those of you trading with us, we give you a sell signal. You want to get out. You want to get out with ease. That is, there are more buying coming in as you're selling. You don't worry about the last few bucks on the table. Rothschild said, the secret to my success is I buy late and I sell early. Think about that. Buy late, sell early. So you're not for the bottoms or tops. You want that fillet. You want that 70% in the center. without having a couple of heart attacks. Okay. Believe me, I gotta watch that because I'm not 22 anymore. And futures at 49-1 leverage. Okay. That's a forward contract. So it's a what do you call it? It's not a it's a you have to you the smart to market, and you have to get out of that position. You can't just sit there. The risk overnight is too high. So that's it for us. That's my spiel. Any questions for me? Yes, this is being recorded as always. It will be posted. Last issue had a huge hit. Very nice. But we haven't even sent an email out yet. Okay. Compared to other ones who've been there a while. Last one had a pretty good hit, and I haven't even sent an email out. I didn't even get a chance. Michael. Oh, the range fella. Okay. Is it possible we're in the 38 to 4200? Okay. Very good question. Let me go to a chart so I can logically answer that. Okay. And let's pull back on this. And we're going to go here. And let's say we put in SPX. Okay. So we can get a more perspective of different months and so forth. Okay. Monthly, weekly, and so on. Your question is from Michael Becker is it possible with a 3000 to 4200 trading range? Hold on. I can buy 4200, yeah. Not much more than that. I think that's a stretch. On the downside, could be. Maybe 3750 or better. Maybe what's this range? Let's see. I mean, listen, if you go here, it's 3700, right? You go there, that's 3770, 4275. 4275, okay? And then this is a 3 sigma, negative 3 sigma, 3700. That range, which is 300, that 575 points, Michael, is 3 sigma range. That is 97% of the travel, price travel. Okay? So probabilistically, yes. A little bit outside of that. You know, again, 4275. Let me put it there for you. 3700 to 4275 is a 3 sigma band, which equates to 99.97% of travel, price travel. Okay, does that make sense? There we go. Okay, that's what we'll look for. So if you want to modify it, you can. You might want to go to, hi Dave, how are you? Welcome, sir. You can go back to the 2 sigma. Would be a lot tighter, of course. The 2 sigma puts you at 3800 and 4175, almost 42, and that's 95%. The range you look at is 95% of the travel. But I'd like to see what were my -3 and +3 fall. One caveat: SPX does not go to 3 sigma that easily. Positive, it doesn't. It does go to -3 sigma, and sometimes often. But the upper end is tough. It's usually between -3 sigma and +2 sigma. Okay, so if you want to play it here, this is not 2. This is 2 sigma. Okay, let's say daily 2 sigma, 4137, 3742. So let's say 3750 to about 4150. That's most likely what we're going to see for that. But I think what's unknown is the earnings season. We got to figure out why, because I think PEs have changed. Yeah, and of course, you know, these guys are going to panic, especially banks, and they're going to cover their ass big time. So read the communique more than what the EPS is. Let's see what they're commenting about, and that's going to be our short stories, if you will, for the next couple of weeks as the earnings roll out. I think, Nancy, when is JPM reporting? It should be end of next week, right? Can't be this week. Toward like Wednesday or Thursday of next week. That would give us a first clue. Yeah. And it always ranked better than JPM. It was a management as a bank manager. So that gives us a clue. That gives us a pretty good clue. And then of course you got to worry about the little guys. The little guys are the one who are in deep trouble. Interesting enough, down here we have a lot of smaller banks. Okay, of course I only bank with the. I mean I don't have a big account, no. But I'm saying most of my money is in the market. But but I do trade with JPM. I mean I bank with JPM and Wells Fargo. But I've done it for. I only dropped. When I left Chicago, I dropped BofA. But those three banks I've been with like 30 years. But I had a good years, I had a small years, whatever. Those are the three banks I stayed with. I never was with the smaller banks. Why? Because A, you travel, you have branches, and B, risk. Yeah, and you want to be, yeah, you be a small fish in a big pond. But you know what? I'm not doing anything with commercial banks really, other than just checking accounts, savings accounts, debits, and so forth. A couple of credit cards. That's it. That's all I need from them. I'm sorry. What is it? April 14th at 6:50 p.m. Next Friday. Okay, got you. Okay, thank you. So I've always been with a big bank. BofA was a different issue. It was just the branch we had in West Loop was not the greatest. I just closed it, and I stay with it too. I'm happy. But down here, right before, about toward the end of February, and maybe first week of March, we got an avalanche. I mean, avalanche of marketing of all these small banks. Regions, Truist, FTB, Fifth Third Bank. I'm thinking, what the hell is going on here? Okay, and of course, maybe some of these guys were a little bit smarter. They'll try and look at their duration risk and figure out they need more cheaper deposits because that's the cheaper funding, and that's what that was at marketing. I mean, every other piece of junk mail in the mailbox were from these banks. I have no interest of changing. I don't need to, so I'm okay. So forth. We shall see. Any other questions for me? I gotta get on a conference call here, guys. Are we good? Okay. What's this? I'm sorry. Okay. That's 453. Okay. Cash. Merci. Any questions for me, guys? Thanks, Dennis. So I'll have another. Thank you, Thomas. Yeah. I have another session here with you guys. Hold on. Yeah. You can't get over me that fast. We'll be here at 12. Yeah, next week at 12. Yeah. And thank you, sir. Appreciate that, Dave. Thanks for coming. Thanks, Brett. So we'll do that. 19 will be there too. I don't know what happens on 26. Okay. Because now I'm going to be in the middle of 5-0, and that's going to be tough. Yeah. By the way, I'm also trading a little smaller because they put restrictions on me because back in SVB days, I overtraded, and my problem was I was not putting my stops in at per required positions I had. I had some on, but not properly, not enough. Okay, so they kind of slapped me on the hand, and they raised my margins. So you know how I did? I said I'll trade less. I took some money out. I said I'm going to trade less. What? I said when you put me back on regular margins, I'll bring my cash in. Yeah. Are you trading somewhere else? I said that's not your business. Yeah. You don't. I mean, my attitude with TradeStation or anybody else, don't trade hardball with me. Can't. The guy who's going to trade hardball with me is not born yet. Yeah, I'll get my trading done. So anyhow, so I've not been that involved, and I gotta get into 5-0, but I'll probably bring some cash in and put it to some testing I need for 5-0. I do live testing with 5-0. I can't release it on a back test. That's not enough. So it's a fairly complex product. Remember, we're replacing API of TradeStation. Not sure anybody has done it. I know a few hedge funds have done it, institutional. I don't know any retail traders done that. But at this point, we gotta take care of our people, and we'll see. It's getting better now. I know we took a little step back in December, but that was an awakening for us. But we've had new people coming in. I mean, this week again. And I know one more thing. Please don't join us first of the month, on the day of the month. I have people lining up to log in to come in again on the 1st. Don't do that, please. Yeah. So give yourself a day or two, because we got to get you set up and all that. And some of these guys were already, of course, they were returning customers. So it was easy for them. I send them a code, do this, and gone. Boom. They're getting ready to go. Anyhow, Mondays are tough for tech support. Anyhow. Thank you all. Sorry I talked too much. I can get out of here. And again, 4:30 next Wednesday. Good night now.